It's March 7th, JLD here, and welcome to MSTR. Today in the Treasury Titans. Nothing in this video is financial advice, but Fong Li wants us to know that it's time for a stretch break. I mean, after a whole week of absolutely crushing the stretch ATM, which I know almost all of you, if not all of you, were just completely celebrating. It's time for a break because it's the weekend. It's Saturday, tomorrow's Sunday. We'll get the orange dot announcement on Sunday, of course. It's not even a question because we know a ton of Bitcoin, at least 4,000 Bitcoin were bought due to stretch alone. And how many more via MSTR common? Time will tell. I'm actually going to go ahead and make my pronouncement right now. I think 11,356 Bitcoin were purchased. Over 4,000 from stretch. And I think that MSTR did over 8,000. I'm just going to, or that would be like, over 7,000. I'm just going to go ahead. That's my number, 11,356. It's definitely going to be, in my opinion, somewhere between 5 and 15,000. That's obviously a broad range. So I'm going to give the exact range somewhere right in the middle. And Fong Li, it's time for a stretch break. And oh, by the way, anybody listening, why don't you drop your guesses below? And again, we know that stretch did somewhere around 4,200 to 4,400, probably somewhere in that tight range of purchases, thanks to stretch.live, strc.live. So in the comment section, go ahead and put your number down there. It's been a while since we've had a lot of comments because, it's been a while since we've had some excitement, but the excitement's back. I've always appreciated those who've continued to comment. Thank you for your likes. If you want to hit a like on this video, by the way. If you just like what Michael Saylor and Strategy did this week with Stretch, just give the video a like. It'd be really nice to see a big boost in likes as well. Let's make this Saturday video good with your support. You're already watching it. I'm very grateful for that. Let's give a comment. Guess the Bitcoin acquisition number. Give a like if you like Stretch ATMing this week. Both of those things will very much help this video. So thank you. Time for a stretch break, says Fong Li. And Michael Saylor says, bulletproof your balance sheet. Absolutely. I did comment. Oh, no, I made a quote post on this. So you'll have to check out my X post. I didn't reply to Michael Saylor. And I thought it was pretty good. I think people liked it, but I love how Michael Saylor says, bulletproof your balance sheet with a capital Bitcoin B. And Michael Saylor also wants us to know that digital credit is better than private credit. Absolutely, without a doubt, that is an absolute fact. And we are being shown that over and over again. If anybody's been tracking, I think it's called Blue Owl, as I believe the name of the private equity firm who stopped redemptions. BlackRock just had a big issue. So I think even BlackRock's realizing how powerful digital credit is. So it's just becoming clearer and clearer. And Strategy says digital credit is better than private credit. Well, how? Digital credit is liquid, private, illiquid, digital, transparent to opaque, homogeneous against heterogeneous, scalable against discrete, accessible against restricted, no fee versus high fee. There's just no comparison. And Fong Li wants us to know the largest institutions hold Bitcoin-backed equity MSTR. Bitcoin-backed credit is next. Stretch. So you can see Vanguard, Capital Research and Management, BlackRock, Saga, Morgan Stanley, UBS, all these, Norges Bank, all these hold massive amounts of MSTR shares. And look at, they've been doing nothing but increase, all except BlackRock Advisors, decrease just by tiny amounts. No good reason why, I'm sure. But massive increase in share ownership, and they are just continuing to acquire. And Fong Li says Stretch is next. They're going to also be adding Stretch at a massive level to their portfolios. Dan says Stretch is a perpetual Bitcoin buyback program. I mean, we saw it this week. Stretch did nothing but buy Bitcoin all week. Incredible stuff. Ragnar says, single best week ever for Stretch. I mean, that's an understatement. Strategy added around 4,500 Bitcoin through the Stretch ATM alone with an average price of around 70,000, maybe slightly below. I expect Strategy to announce up to 10,000 added Bitcoin on Monday. Again, my number is 11,356, but I'm always a little permeable. And then you can just see the Stretch ATM analysis here. Monday, Tuesday, Wednesday, Thursday, Friday. Exciting stuff. And I think this was probably taken during the day on Friday because I'm pretty sure it ended at a higher volume on Friday than 158. It kind of ended with a bang, so to speak. Didn't quite get up to Tuesday's 199, but it was close to there. So obviously, incredibly exciting stuff and just a good snapshot of what's going on with the ATM here. Going to move on over to Adam, who says, the stretch singularity is here. Today is the biggest day for stretch volume above 100, and the market hasn't even been open for 2 hours. 850 Bitcoin acquired in 1 hour and 50 minutes since market open. And are you really going to sit around and let Saylor buy all the Bitcoin this cheap? I mean, look at these insane numbers. Oh man, it's just been a great week. And I think next week's going to be as good or better is my estimation, because we're even getting closer to the snapshot date of March 15th. So it's going to actually be a day or two before, because that's on the weekend, I believe. We got CJ saying stretch trading greater than 250 million at the $100 par. And we're still a week out from the record dates. That's absolute insanity. I love it. And then Mark says, stretch 1 month volume weighted average price is now greater than $99. Per their guidance, the stretch dividend increase beyond 11.5% is unlikely, though management can still raise at their discretion. I think given the opportunity to accumulate large amounts of cheap Bitcoin, MSTR may still opt to raise to 1 to 11.75%. I am hoping this is the case as well, because again, why are we trying to kind of toe this line? This is just my thought. I mean, maybe Saylor and his team are running the numbers and it does matter significantly, but I don't feel like we should be trying to toe the line of like, what's the perfect percentage to keep the par above 100? Is it 11.5? Is it 11.75? Is it 11.25? That could risk us being below par for days, if not weeks, which, as we saw, can be thousands and thousands and thousands of Bitcoin that we fail to acquire, that we'll never have the opportunity to go back in time and acquire those. So to me, I actually say raise it to 11.75 this month, raise it to 12 next month. 12 is just a round, juicy number. And then if it's behaving correctly, then let's just call it a day at that point. That's my thought. That's why I said get to 12 and call it a day. And then Strategy Max says, don't think they will. 11.5 seems to be the sweet spot. No reason to raise unless markets say so. And I'm like, but why even like try to like think it might be the sweet spot? Let's hammer home the sweet spot and erring on the side of caution of let's not let this par drop below 100, because we don't want to miss even 1 hour, let alone 1 day, let alone multiple days of potential ATMing of stretch. Michael Saylor is dropping some serious value bombs on a video I have coming up for you. Again, I want to just say thank you to everybody that's still watching this through this incredibly hard 7 months. It just feels like we are having a turnaround. It feels like we're on the precipice of bottoming. It's not saying that there won't be a couple more flush outs to the downside. That's always the possibility with Bitcoin. Always, always, always. But it just feels like we are experiencing the beginning of a pendulum swing. That's what it just feels like to me. Again, no financial advice, but it just feels different than it's felt the last 7, 8, 9 months. So I'm very bullish for the remainder of 2026 and going into 2027. Of course, I'm very, very bullish. But listen, I'm a permeable. That's just the world that I live in. I've decided I'm going to be an optimist through thick and thin, because I know 5-year, 10-year, 20-year plan, that's what wins. That is what wins. So again, call to action in the video, in the comment section, please drop your number. Just hit the pause button right now. Hit your number of what you think Saylor is going to acquire and strategy for Bitcoin this week. I'm 11,356. Total guess. That's a little bit of hopium, because that's pretty aggressive, but I think it can happen. And also, hit a like button if you like. Hit the like button on this video if you like what Strategy's been doing with Stretch this week. And video coming up of Michael Saylor as soon as we get back from thanking our sponsor. If you're building in the Bitcoin era, structure matters. Treasury strategy, capital allocation, entity structure, it all starts with a solid foundation. And when you're ready to form your business the right way, Northwest Registered Agent helps you do more than just file paperwork. With Northwest, you don't just create an LLC, you build a complete business identity from day one. That means registered agent service, a real business address, operating agreement, domain, website, professional email, phone number, and built in privacy. No juggling vendors, no sketchy upsells, no selling your data. They've been doing this for nearly 30 years, and they're the largest registered agent and LLC service in the US with over 1,500 corporate guides, real humans who know your local laws and actually pick up the phone. Northwest handles everything in house, which means fewer hands on your data and privacy by default for every customer. Don't pay hundreds or thousands of dollars for what you can get from Northwest for free. Visit northwestregisteredagent.com/JLD free and start using free resources to build something amazing. Get more with Northwest Registered Agent at northwestregisteredagent.com/JLD free.
But it's just a very simple swap of Bitcoin yield for US dollar yield. You can't have the one without the other. But as you can see here, this is a very powerful model. And the way it works out is once you crank up the amplification, you can expect to outperform the Bitcoin by anywhere from 30% to 100% or more, and have a heck of a good time while you're doing it. It's definitely very interesting. For those of you interested in the relationship of amplification to growth rate, here it is. It's not very complicated. And on the subject of digital, it's all recorded. You can download that, and you can screenshot that and study it. CJ will probably do 1-hour podcast on that formula. Ask him. The big idea of digital is every 15 seconds, we're creating value. Okay? In 15 seconds, we might sell $10 million of credit, buy $10 million of Bitcoin, increase our capital by $10 million, loop, rinse, and repeat. We are synchronizing the capital and the credit. How do you build a $10 million building in 15 seconds? Right? We're doing it without people. We're doing it without labor. There's no tractors. There's no bulldozers. There's no land. There's no expensive long-form contracts. Right? You don't have all of the friction of the world. Right? The reason that digital equity is so compelling is because you're creating digital property, digital capital, and digital credit instantly in a synchronized way, friction-free, in cyberspace, in digital space, in financial space, if you will. And that makes it the most transparent, most efficient, most compelling type of credit. And so what are you going to do if I could snap my fingers and I could build a digital building in 1 second, don't you think I would probably sell it to you cheaper than the guy that took $1 billion to create an actual building in 10 years? If I can do this, I can give you a better deal. So what are we doing? Well, we're just making sure the credit's twice as good or 4 times as good. We can pay 4 times as much because we have the most efficient credit generator in the world. And I will just end with this thought of the reflexive flywheel. It's not complicated, but it's the credit creates the amplification. The amplification from the credit creates the volatility. That's what creates the open interest in the options market. All of that creates enterprise value. You're doing something, you're accumulating capital, and the capital increases the size of the enterprise. The capital we're gathering is going into Bitcoin, creating capital appreciation. We're appreciating the value of the Bitcoin network. You can't buy $55 billion of Bitcoin without the value of Bitcoin being higher than if you didn't buy the $55 billion. We're also putting capital appreciation on our own balance sheet. The credit creates the equity premium. How are you not a Bitcoin holding company? Well, we're doubling our Bitcoin per share. Well, if you double your Bitcoin per share, I'll give you 100% premium, right? If I'm an equity investor, I have to have something to believe in. You're doing something. The credit business creates the equity premium. The equity premium attracts more capital. The credit thereby attracts new investor base. You get credit investors. You get retirees, and corporate treasurers. They wouldn't have bought Bitcoin. New investors. That diversifies all the macro correlations. The business is going to trade versed on the junk bond index or the investment grade index or the forward yield curve or the euro versus US dollar index or the relationship of Bitcoin to gold or people's forward view toward Bitcoin, or their view toward big tech or macro or something, or maybe they just get excited about the future of digital credit. You've got a lot of different correlations. Each of those attracts new pools of equity. That's all of those things strengthen the brand. Everybody wants to talk about you. The brand is who wants to talk about you. So you're continually building awareness, and that creates optionality, right? We have the option to sell the credit, not sell the credit, raise the dividend, lower the dividend, right? The more optionality creates more volatility, creates more equity premium, and that creates trading because people disagree with you. It's like, I think it's a bad idea. I think it's a good idea. I'm going to short it. It's too cheap. It's too expensive. Well, I don't mind if people short $50 billion of the instrument, they got to buy $50 billion of the instrument back at some point. That's creating the liquidity. That creates credit. In this particular case, the credit attracts credit. And what I mean by that is people are more likely to offer you loans against the stretch or against the MSTR because of the liquidity in the instruments, and that attracts more capital.